Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday. Starting with Africa, with major markets we track in Nigeria, that positive sentiment we saw on Friday was lost at intraday as the index, which was inching to reclaim the 53,000 level, shed marginally about 0.02%. From the southern part of the continent, the GSE index, on the flip side, gained about 0.25%. While Egypt follows the NGX, as the NGX 30 lost about 0.14% at intraday. Friday's trading session for Kenya was positive, up about 0.58%. All right, heading over to the Middle East, it's an even spread of positive and negative sentiments. Abu Dhabi dipped the most at intraday, almost 1%, while Dubai lost marginally. In the other regions, it was positive. Both Saudi Arabia and Qatar gained more than 1% each. Well, moving over to Europe now, as Europe continues to move away from Russian oil and gas, where they're looking for gas now. We have Janelle Dumoulin joining us right there from Berlin. Great to have you. So the German economy minister, Vice Chancellor Robert Habeck, is in Israel today with energy cooperation high on the agenda. What are we expecting?
As Europe faces rising energy costs and with that a burgeoning cost of living crisis, helping Europe diversify away from Russian energy sources is a key and urgent priority for this administration. As such, German Economy Minister Habeck is expected to meet the energy and economy ministers of the Israeli government. He's expected to discuss potential ways to route Israeli natural gas to Europe. One of the proposals on the table is the so-called East Mediterranean pipeline, also known as EastMed. Now, that could connect gas reserves in the region to mainland Europe via Cyprus and Crete. It's expected to carry 9 to 12 billion cubic meters of natural gas annually. That is around 10% of Europe's supply. That's just one example, but there are other projects on the table. But as the issue of energy supply grows ever more severe here on the continent, there will be quite a bit of attention on what headway Habeck manages to achieve on his trip.
Well, we'll keep tracking that, but will the projected pipelines
as Europe faces
from Israel, do you think they'll help ease Europe's supply crunch?
Well, it doesn't seem that that could happen anytime soon. The EastMed pipeline is in very early stages. It could be years before it becomes operational, and there isn't even a guarantee that it will become operational. And it's also not a stranger to controversy. Turkey has complained in the past about being excluded from this project, in its view intentionally, and that really just goes to show that any big infrastructure project meant to supply Europe with natural gas from the region will have to pick its way around the geopolitical challenges present in the neighborhood. But Israel is preparing itself for the opportunity at least to become a direct supplier to Europe. The country's ministry said last month it's preparing for a new round of tenders for gas exploration off Israel's Mediterranean coast. That's expected to begin in the third quarter.
All right, so how are the markets looking in Europe this week?
Well, we're moving into what looks like an interesting week for markets. Investors are especially keeping an eye out for details to emerge from a European Central Bank meeting happening this Thursday. It's widely expected to follow the U.S. Federal Reserve's playbook from nearly 3 months ago and finally move towards a tighter monetary policy. ECB Chief Christine Lagarde is expected to announce an end to bond buying this month, as well as a first rate hike next month. This, of course, is all happening against the backdrop of surging inflation in the Eurozone. Eurozone consumer prices rose by 8.1% year on year in May. Let's see what the ECB's moves will do to that number.
Right. Well, we'll keep tracking that. That's Janelle Dumoulin right there from Berlin. Thank you so much. And now we head on to the UK. Well, it's all about a vote of confidence for Boris Johnson. Is feeling the heat right now. Let's get an update from Juliana now. Great to have you, Juliana. So you spoke to Ini earlier about this vote of confidence, for Boris Johnson. What's the update right now?
Good afternoon, Laddie. Well, the update is Prime Minister Boris Johnson is fighting for survival. There have been various meetings taking place across Whitehall and Westminster. The Prime Minister really keen to rally round his supporters, and his supporters have been doing just that. They've been speaking across various media channels in the UK. I'm surprised I haven't had a call for someone to come into channels, but they all seem to be backing him publicly, that is. We just heard from the Deputy Prime Minister, Dominic Raab, saying that he stands, head and shoulders with the Prime Minister, and we've heard similar sentiments from the Chancellor Rishi Sunak, as well as the Foreign Secretary Liz Truss. But as we know, as I've been reiterating, that tonight's ballot is a secret ballot, so what is said publicly may not be what is spelled out in the results. The vote will be taking place at 6 o'clock. We'll be getting the results shortly after. And just to remind our viewers, just in case anybody has been living under a shell for the past 6 months, the Prime Minister is in deep trouble because he broke lockdown laws during lockdown. He's the one who spelled out those rules. In April, he was fined £50 by the Metropolitan Police for attending a rule-breaking lockdown party for his birthday in June 2020. Subsequently, there have been some pretty outrageous images showing Downing Street civil servants as well as other staff enjoying themselves, so much so that security guards were having to wipe the walls off red wine and mopping up vomit. Over the weekend, we were celebrating the Queen's Platinum Jubilee. Lots of talk about service and servitude to the public, which is potentially why it was during that time that the trigger which sparked this vote, 15% of Conservative MPs, was reached. Sir Graham Brady announcing to the media this morning that he had spoken to the Prime Minister and a vote will be cast today. And now the Prime Minister will only survive if at least 180 MPs back him. There are about 330 Conservative MPs in the Palace of Westminster. The bookies are saying that the Prime Minister will definitely win this vote. But of course, what is going to spell out his tenure over the next couple of months is if whether or not he is going to be able to sustain his leadership. We've seen it before. We saw it with Theresa May. We've seen it with Margaret Thatcher, that once you are going for a vote of no confidence, your tenureship is likely doomed. But we'll just have to wait and see.
Well, wait and see. We'll see if the backers actually come through. We'll get more update as it unfolds. But the London Metal Exchange is being sued by the New York hedge fund Elliott Management for about $456 million. Seems that they're not happy with the decision to cancel nickel trades, the last time it spiked on the exchange.
Absolutely, that's right. This is a developing story, but pretty massive, and it sparks further headache for the London Metal Exchange, who have faced waving criticism since it made that decision on March the 8th to halt trading on the London Metal Exchange. It's a 145-year-old exchange. This is the first time in almost 40 years that they did halt the exchange and the trading, and this is because of the invasion of Ukraine by Russia. As soon as that invasion happened, we did see that commodity prices was spiking, and it was particularly hitting the metal exchange market. We were seeing prices that they hadn't witnessed before. And now Elliott Management, which, as you rightly said, is a hedge fund based in America, an activist hedge fund, I think it's worth mentioning. They have put out this claim, which they're taking to the English High Court, saying that the LME overstepped their boundaries, that, how dare they decide to halt because they see prices going out of control. I suppose if you're somebody that is trading in stocks and shares, that's exactly what you're trading in. You want the peak so you can win, and then, of course, you take the losses when they come. So they think that they completely overstepped their mark. The London Metal Exchange, who's run by a Hong Kong firm, has said, of course, that they are going to fight this tooth and nail, but $454 million, that's a hefty lawsuit. And like I said, it's a developing story, so once we get more information, we'll provide it.
Right. No trader wants a winning trade stopped for any reason. But how the market's looking at it today?
Pretty good. Seems to be a Monday bonanza following the 4-day bank holiday weekend, even though it's pretty wet and damp, and London is at a standstill because of the tube strike. But the FTSE All-Share is up by 1.35% at intraday. The FTSE 100 up by 1.41%, and the FTSE 250, the domestic market, up by 1.10%. In the currencies market, the British pound is currently trading up on the US dollar by 0.56%, up to on the euro by 0.44%, and up on the Japanese yen by 0.52%. The blue chip lifted by the gains of Brent crude trading, I believe, at a 3-month high of over $120 a barrel. BP and Shell, they're the biggest risers on the FTSE 100 today.
All right, let's see if the bonanza continues this week. Thank you so much, Juliana.
Thank you.
All right, now let's look at other markets in Asia Pacific. Markets are mixed today, with Chinese stocks leading gains. Regionally, as tech stocks in Hong Kong surged. Hong Kong's broader Hang Seng Index closed 2.71% higher at 21,653 points. Shares of Chinese tech firms in Hong Kong soared following a Wall Street Journal report that regulators in China, concluding probes on ride-hailing firm Didi and 2 other U.S.-listed tech companies. Regulators plan to lift a ban on the firms adding new users on their platforms and allowing their apps back on domestic app stores, according to the report. In Japan, the Nikkei 225 climbed 0.56% on the day to 27,915 points. As shares of fast retailing jumped 2.77%. On the Topix index advanced 0.31% to 1,939 points. Australia's S&P ASX 200 fell 0.45%, finishing the trading day at 7,206 points, while MSCI's broadest index of Asia-Pacific shares outside Japan rose by 0.8%. And stock futures were higher in early morning trading today after a losing week, as investors continue to bet that the Federal Reserve will tighten monetary policy aggressively to combat surging inflation. Futures on the Dow Jones Industrial Average gained 132 points, 0.4%, while the S&P 500 futures and 100 Nasdaq futures also rose by over 1%, actually 1.41% for the Nasdaq. Investors have been grappling with fears that the central bank could raise rates too fast and too much, causing a recession. Recent statements from the rate-setting Fed members indicate that a 50 basis point or a half percentage point rate increase are likely at the June and July meetings. And oil futures jumped today, with Brent rising above $120 a barrel after Saudi Arabia hiked prices for its crude sales in July, signaling tight supply even after OPEC Plus agreed to accelerate output increases over the next 2 months. Brent crude was up 91 cents at $120.63 a barrel at early trade, after touching an intraday high of $121.95 per barrel. That's about a 1.8% gain from Friday. U.S. West Texas Intermediate crude were up 93 cents to $119.80 a barrel after earlier hitting a 3-month high of $120.99. It gained 1.7% on Friday. Now to our next conversation. Globally, sub-Saharan Africa remains the most underserved region in terms of internet infrastructure, internet penetration on the continent, about 40%, excluding more than half of the continent's population. The recent approval given to the likes of Starlink by Elon Musk to provide satellite internet in Africa. We'll discuss the expected impact with Ayobami Omole, a telecoms analyst at Telema Research. UK, great to have you on the program. So, Ayobami, so Africa still lags behind, you know, when it comes to internet penetration. Is satellite internet the answer here?
Yeah, you're right. Internet penetration is low in sub-Saharan Africa compared to other regions. Is satellite internet the answer? I would say no. Can it help? Definitely yes. And, you know, with many problems, they are usually multifaceted, and it will require a lot of solutions or factors working together to make sure that it improves. What way can satellite internet help? like you said in your introduction, definitely infrastructure or internet infrastructure generally is poor in Africa, especially in landlocked countries. And we know that landlocked countries are like 1/3 of the African continent. So fiber rollout and getting the necessary infrastructure to make sure that quality internet is available in those areas can be quite difficult. Satellite internet can come into play in this aspect by acting as a backhaul for mobile network operators to spread their services, both mobile and internet services, to this region. And this is not a new phenomenon. We've seen it in other countries. In Japan, for instance, a mobile network operator last year announced that they will be connecting 1,200 of their remote towers to the Starlink satellite constellation to provide internet services to people in rural areas. In Africa, also Orange is working with a space satellite service to test if it would be possible for them to spread 3G services to some of the rural areas in the country, or in the continent rather. Why I think that satellite internet might not be the total answer is because we have other issues. As much as internet coverage is a big problem in Africa, we have an internet coverage gap of about 23% thereabouts. That means that the percentage of the population that does not have access to the internet at all. We also have, a much larger internet usage gap. That's the percentage of people that actually have internet coverage but do not use it. And one of the big problems is, smartphone penetration. Take MTN, for instance, the largest mobile network operator in Nigeria. Their 3G population coverage is about 90%, 4G population coverage is about 70%, but the smartphone penetration on their network is about 50%, and that is because, affordability is a big concern. Apart from the fact that, we're poor people, it's just very difficult for most Africans to get affordable smartphones or devices that they can connect to the internet. According to Alliance for Affordable Internet, the average cost of the smartphone is about 45% of the monthly income of someone in sub-Saharan Africa, compared to 2% in developed countries in North America, and the global average of about 27%. So yes, to your question, can satellite internet solve some of the problems that we have in internet penetration? Definitely, but there are also other issues that we need to consider that are very important to improving internet penetration in the continent.
Quite interesting, but how would this impact local internet providers?
Yes, so definitely there's going to be competition. Competition is imminent, but I also think that there's opportunity for collaboration. Competition in the sense that Starlink, their service offering or the promises is that it's very fast internet when you compare it to what is obtainable with most internet service providers and MNOs. At least in Nigeria, is offering at least 10 times the speed. So of course, better service offering is going to attract more people and is going to cause competition and make the mobile network operators and internet service providers be on their feet. But there's a concern for affordability. So Starlink, or in their mandate, is to provide internet services to rural areas and people who do not have access to internet. In our experience, or from data, most of those people are probably not going to be able to afford the service. So businesses and high-income households are definitely going to be a place for competition, and everyone is trying to grab a share of that market, and it will be quite interesting to watch. But like I said earlier, there's also an opportunity for collaboration with MNOs using satellite internet as backhauls to spread their services to rural and add to reach area.
All right. Well, we'll keep watching that space to see how it all unfolds. Thank you so much, Ayobami Omole, telecoms analyst at Telema Research. It was great having you.
Thank you very much, Ladi. It was nice to be here.
Thank you. All right, so African business heads and UAE investors are keen on finding ways to ensure Africans in diaspora are not left out of the conversation as policymakers on the continent continue to work on the Afro-Continental Free Trade Agreement. At a roundtable meeting in Dubai, tourist capital of the UAE, they discussed current challenges plaguing their various interests. Well, our correspondent, Maiwa Adegoke, brings us this report. To take a listen.
Africa's success as the world's largest common market is of interest to the UAE business community. At a roundtable on the Africa Continental Free Trade Agreement, organized by the UAE African Networking Group, the progress made, challenges, as well as the role of Africans in diaspora are top on the minds of these business leaders, CEOs, investors, and top company executives.
The ESCFT is also looking at the diaspora participation. For me, I look at diaspora as not in terms of color or race, but in terms of territorial space. Wherever it's not part of Africa, to me it's a diaspora, a sixth region. And there is a need for that kind of partnership and collaboration.
Hindrances to digital trade, high cost of transportation, lack of infrastructure to promote seamless logistics are some challenges these entrepreneurs face.
It cost me $1,000 to go from Senegal to Gambia, which is a 45-minute plane ride, to go and do business in a neighboring country. Ghana to Ivory Coast is again another $1,000. Sometimes you cannot get a direct flight; you have to leave out.
One time I was traveling to Kenya. I was having my Cameroonian passport at that time. I had so many questions from the immigration, and I saw someone coming from Netherlands. They gave him the stamp, and he was going, no question, nothing. And I felt really, this is unfair. You know, you are in EU. They have the Schengen Agreement. They can travel. There is no restriction for people, and we need to implement something like this in Africa because it will enable the development of transport. The demand will be higher. It will enable to lower the cost of transport, and also for the private sector to come with a different supply to meet the demand.
Experts say although African countries put the highest tax, up to 30% on aviation, successful implementation of the single African air transport market will present a win-win situation for all. Other issues raised include intellectual property theft, dispute resolution, government pushback on cryptocurrency, dominance of the dollar as an exchange currency, and e-payments.
There needs to be some kind of regulation or some kind of structure, and then crypto can really do wonders, especially in the context of Africa.
Organizers say the conversation must continue as the UAE's $1.2 billion investment in sub-Saharan Africa over the past 5 years makes it the largest investor from the Gulf region.
I think it's also important for businesses who want to do business in Africa to understand what changes are coming.
I think that the future of global trade, cannot be discussed without Africa, and we find the UAE a veritable hub, to bring that to pass.
At the end of the day, all present agree private sector must engage government entities even more and advise on the applicability of policies, as diaspora remittance plays a significant role in the growth of the continent. From Dubai in the United Arab Emirates, Maya Wadegoke for Channels Television.
And to other stories now, the federal government of Nigeria suspended plans of selling $950 million overseas bonds owing to unfavorable market conditions during the time frame approved for the fundraising. According to the Minister of Finance, Zainab Ahmed, the planned $950 million bond sale would account for the balance of $6.1 billion overseas borrowing planned for 2021 after it raised the second tranche of $1.25 billion in March. And the European Union Aviation Safety Agency has revoked a license that granted Kenya Airways to maintain UK-registered aircraft after it failed a compliance audit. The Kenyan national carrier said the agency withdrew the license because during the certification audit, the agency requested that KQ separates some of its general storage and have a temperature control device in which compliance with European standards. And Tanzania on Sunday reversed its decision to lift a controversial ban on wildlife exports a day after the move triggered an uproar in the East African nation. The ban imposed in 2016 was in place to safeguard the country's protected animals and birds who were illegally being shipped abroad. On Saturday, however, the wildlife authorities announced they would lift the ban for an initial 6 months from June 6th to December 5th for traders to clear stocks of animals that were unable to sell under the ban. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.